Hello and welcome to this week's Forex Outlook here at xm.com. I'm Andreas, your EU investment analyst, and I'm here with my colleague Rafi Boyajan. So Rafi, the dollar is moving higher. It is edging closer to last week's near 1.5-year high, and I'm referring to the dollar index, of course. The Federal Reserve yesterday reinstated that it remains on track to continue normalizing policy. We also had the midterm elections. The greenback was weaker ahead of the elections, though afterwards the split Congress helped the US currency, the narrative being that the checks and balances that will now be in place will lead towards more sustainable growth. Now, in terms of next week, Rafi, you're working on a report. What should we expect in terms of dollar drivers?
Well, as you said, we saw the dollar recovering after the falls from early in the week following those midterms, which came in line as had been pretty much expected. The Fed was also, they didn't really change anything much in their language, and we saw the dollar rebounding significantly. Next week's data, it's going to be the main focus will be inflation and retail sales numbers. So overall, the data isn't unlikely to change the near-term picture much for the US economy. So pretty much what happened this week will likely set the tone for next week as well.
And Rafi, this week we also saw the antibodies outperforming the QE dollar, especially after robust employment figures that saw the unemployment rate falling to a decade low. The Australian dollar will have an RBA meeting. We could say it was somewhat more hawkish, the RBA. I mean, it did mark up its growth forecast for 2018 and 2019, as well as saying that it expects a pickup in inflation over the next couple of years. The Aussie was also being helped by some upbeat data out of China on trade. Now, on next week?
Well, next week, the Aussie is expected to remain in focus. We've got the monthly employment numbers coming up next week out of Australia. We're also going to have more Chinese data in terms of industrial production, retail sales, and investment. If the Chinese numbers do point to further weakness in China's economy, we could potentially see the Aussie, which towards the end of this week, the Aussie has come a little bit under pressure, some risk of weighing on the currency. So again, that could be negative for the Australian dollar in the coming days. But on the other hand, if we do get strong employment numbers, that's only going to reinforce the RBA's optimistic view. So could be a mixed week for the Australian dollar.
And now, Rafi, turning to the euro and sterling, the common currency is down in the week. We have the prospect for a clash between EU and Italian officials over Italy's budget remaining on the table and weighing on the currency. We have a deadline next week where the Italian government basically was asked to resubmit a fresh budget that would align with EU fiscal rules. Turning to sterling, Rafi, it is up on the week. We have Brexit optimism continuing to help the currency. We'll have some key data next week. Can you talk to us about those?
Well, yeah, Brexit has been dominating the headlines for the past few weeks, and will continue to that next week. So, although we're going to have quite a lot of UK data coming up in the coming week, sterling will likely be more sensitive to those Brexit headlines as we're getting ever so closer to a deal. On the other hand, of course, if we see further postponement of a deal, of a breakthrough, that would be negative for sterling. In terms of the data coming up next week, they are likely to have a significant impact, although normally they would. We've got inflation numbers coming up, we've got the unemployment numbers and retail sales. Perhaps retail sales, which is an indication of consumption, which UK is heavily reliant on in terms of household consumption, and then wage growth as well. So those would probably be the bigger movers from next week's data. But the focus will pretty much remain on what's going to happen in terms of Brexit negotiations.
And what else should we be on the lookout? Rafi, I understand we're going to have some important data out of Japan.
We're also going to have Japanese GDP numbers. We are expecting a contraction in the third quarter. We did have some natural disasters in the past quarter, so that's expected to have hurt industrial output in Japan. The yen has been on a downtrend during November. We saw some easing of trade tensions as well as an improvement in risk appetite. So risk sentiment will likely be a bigger driver, and any impact out of the GDP numbers will probably be fairly muted.
Thank you very much for your analysis, Rafi. Thank you everyone for watching and have a great day.